Good evening, everyone, and welcome to another webinar by FOSI Integrated Communicators. Our topic for today is Making Gen Z Financially Fit, where you will learn if your younger ones will be able to run your business successfully or handle the inherited wealth in your absence. Now, before we begin, I'd like to tell you more about FOSI Integrated and what we exactly do. So, FOSI is an 11-year-old marketing communications agency based in Dubai. We support small businesses, startups, and entrepreneurs to manage their marketing functions. Being a marketing agency, we make sure that our ideas help your business gain the momentum you desire and help us build strong relations. Now, the main agenda behind this event is to create more awareness about the new products or services in the market. Through these webinars, you can connect to our experts and hence build a good relationship with them. And today's webinar is beneficial for those business owners who want to ensure that their children can manage their businesses as well as their inherited wealth in their absence. Before getting started, there are a few house rules to be followed. That is, all participants are kindly requested to be on mute. Commenting is strictly prohibited. And lastly, if you have any queries, there will be a Q&A session at the end of the webinar. Moving forward, I'd like to introduce our speaker for today, Ms. Padmapriya Ravichandran, who holds certification as a financial planner from the Chartered Insurance Institute in the UK. With nearly 5 years of experience as a financial advisor, Padmapriya offers a distinctive outlook on financial planning, wealth generation, and wealth preservation. She believes in an approach that prioritizes knowledge sharing, ensuring that her clients are well informed about the advantages and disadvantages of each financial decision. Among her multiple passions, she is particularly dedicated to promoting financial literacy among the younger generation to safeguard their family legacies. So, without further delay, I'd like Padmapriya to take this forward.
Thanks, Nishita, and thanks, Anupama, for this opportunity to speak about the topic that I'm most passionate about. So let me share my screen.
Sure.
Yeah, so as the title goes, we're going to talk about how to make Gen Z financially aware, right? And for that, we have to understand why they have to be financially aware. And we'll be addressing two broad age categories. One's who are young enough to get trained by us, and the other who are on the other side of the spectrum, just ready to take over the wealth. Right? So let's start. Okay, coming to the why. Right? So how difficult is it to lose $1 million? Right? Give me $1 million and I have 101 investments that I can think of. Right? Earning money might be easy, but do we have the skill to preserve and to grow it? Like even your children, when they're going to inherit, it's actually easy money for them. They haven't worked for it, right? By the privilege of being your children or grandchildren, they're going to inherit like a couple of $1 million or maybe some real estate, gold in their locker, right? So inheritance is an easy way to get money. Some people may win a lottery. And if you're very good in, say, sports and acting, of course, you earn your millions or you work very hard and, you've saved enough, you've grown your wealth and you're very well settled in life, right? So what is it that makes it easy or difficult to lose money, right? So let's see the examples first, right? So starting with Boris Becker, right? He managed to lose $127 million, right? And Ranbaxy, part owners of Ranbaxy, you can see the number for yourself. It's $225,000 million, right? And the biggest lottery winner, he lost 314. And the famous Amitabh Bachchan, he almost lost all his assets. So is it the amount of money that you have in your hand that determines whether you're wealthy? No. It is how you're going to manage it, right? So when we come into reasons, what are the problems, right? Why do people lose their money? It's because of a lack of financial discipline, lack of knowledge, right? And a sense of entitlement. Now, what do I mean by that? Maybe your children are used to flying business class every time. Maybe they're used to going on holidays thrice a year, thrice a year, staying in a 5-star hotel. But What they don't realize is that it's your income that's fueling those dreams to come true. When they are not in a position to generate that kind of income for themselves, what happens is that they start eating away into the asset that fuels that income. And that asset could be your investments, it could be your business, right? So, all the reasons that I've listed here, including poor financial advice that people get from neighbors, from friends, from bankers. I'm not saying bankers give poor financial advice to see whether it's good or not, right? That lack of knowledge is what causes the wealth to be eroded. And how do we prevent it, right? So we prevent it by giving them financial education coupled with experience, right? So what do I mean by that? Just knowing what is an asset, what is a liability, what is debt, right? What is investment will not suffice. They have to practically experience and get that knowledge, right? Ground knowledge. So you have to be financially savvy to be wealthy, right? So moving on, as I said, we're going to deal with two broad age categories, right? So the teens and young adults, maybe in their 20s, and those who are expected to inherit wealth in a few years' time. Now, starting with the teens to young adults, right? So, what are the advantages? The advantages are if you start training them early, they can afford to make mistakes, and you're there hand holding them. You're training them to take on, and you're increasing their independence, their self reliance. So, in your aim, like your personal aim that they should be able to own the business or manage the investments by the time they're 25 years old, right? That's your internal target. And it is achievable because I have come across very young people, like in their 20, they're just 23, 24, and they're already handling their family business. I've met them personally. So it's not unachievable. It's like what we do when they are young, right? So we've seen what the problems are, okay? If they do not have the knowledge, and if they have the knowledge, what is the price, right? What are you going to achieve at the end of the day? You're able to pass on your expertise, your ethics, and values. This is the Ambani family, one of the richest. And all three children have been so well trained in running the business. The parents have been able to pass on their values, their ethics. They're able to ensure that their legacy is being continued, right? And in the process, look at the life skills that they would have imparted, right? Hands on, they would have taught them how to solve problems, how to take decisions, how to lead multinational companies, right? And the resilience. Every company has a downturn, right? And the ones who are able to succeed are the ones who are most resilient. So these are the advantages, or this is the price that you're going to get for yourself if you make sure that your children or maybe your grandchildren are also trained in business and in wealth management. Now, what is the method? We've seen the problem, we've seen the price. Now, how do we get from A to B? Right? So, first is you have to identify your areas of operation. If it's a business, you have the accounts, finance, legality, right? Investments, business processes, systems. For personal, of course, a subset of these. So, it's what will apply to you, you have to take from here. First is identification of areas that require training, right? Distinct areas. The second one is mentorship, right? Either by senior employees who have been with you for long, or even the retired ones, right? Engage them to be mentors because they know how how you have been handling your business. So they'll be able to teach them that this is the style that has worked for the business, right? So passing on that knowledge. And where do you start? Like we say, when they are very young and they start doing their homework, start with their most favorite subject. So it sets the tone. The same way, start with the area that interests them the most. Some people like accounts, they're good with numbers, right? So they love accounts and finance. Some people hate it, they prefer the marketing and sales. They love talking to people, interacting, getting the sales in. And some people are so they're oriented towards technology, so they prefer the IT systems, the business systems. So start with that area and start by mentoring them in those. And one is mentorship. The second is the certification courses, right? So you have certification courses from very good universities So put them through those courses so that they get trained in a very structured way. All the modules are covered, etc. And there are many institutes which will be willing to curate the courses according to your requirement if you have a specific requirement. So make use of those. And end of the day, what drives the business is the numbers, right? So they must have a holdover accounts in finance, whether they like it or not, it doesn't matter. So make sure that they are familiar with what accounts is, what the basics of accounts and finance are. Right? And end of it, once they have the knowledge, let them be an intern in each and every department, at least for a month. Let them get that hands-on training. Maybe sometimes more than that is required, longer than 1 month is required. But being an intern, nothing can replace that. It's invaluable. Right? So they get to actually experience what it is to be on the ground doing the work. They learn what the challenges are in each department, and then assessment for readiness. Right? So how do you do that? It could be, the knowledge base. Of course, we are used to the tests and exams, but here it is about discussion, right? Understanding what the child has imbibed, what they have understood, right? What is your expectation? Like if you're going to say head that department, is he ready for it? Right? And what it is to head the department, what are the qualities? So you have to make sure that the child your offspring is trained for it. And you can arrange for more training. They are young. We're talking about young people here. So it's not like at one shot they're going to get ready. So each level, you increase the difficulty and increase the complexity and make sure that the aim should be that they should be able to head the department. Maybe not get into the actual debit and credit, but understand what the whole department stands for. Right? So to summarize, for the young ones, that is late teens to young adults, it's about training them knowledge-wise, right? Certification courses, internships, and engaging them in your business and decision making according to their level. Maybe it'll be a bit too early to reveal all the numbers to them, right? Sometimes it's not a comfortable thing, but at least wherever they can be involve them. And very important, remunerate them for their efforts, right? Don't take it for granted. End of the day, you're going to inherit, so it's okay, just come and work. No, they should feel valued. If they're paid, then they feel that they're contributing to the company. So it motivates them more. And allowing them to make mistakes, to give feedback, to ask questions will foster a healthy environment where they're going to learn and flourish. Yeah? And now we move to the second age group. This age group could be 40s, 50s also, because you're just about to hand over your company to them. And there are people whose children are already 40s and 50s and they are not in any shape to take on the business, right? It is happening in the world now. Yeah. For them, the primary focus is to be on managing the wealth because they shouldn't lose it. Right? The minute somebody or the bankers or the wealth managers know that somebody's inherited a couple of million, example, right? They're going to have 10 advisors around them suggesting different investment opportunities, right? So first and foremost, just not get swayed by anybody to make sure that they can manage the wealth and not lose it. And parallelly, very important is to train them in the business, how to run your business, because that's a huge asset you've created, which is a golden goose. It's going to create that income for you. So you have to focus on training them in the business, right? And starting with managing wealth, right? Or business, knowing the right position. Where am I starting off? We're talking about mature people here, right? So they have to know all the assets that are being owned, all the debts and liabilities, who owes money, whom do we owe money to, right? And becoming aware of the current business operations with who are my suppliers, who are my customers, right? With which banks do I have LC? Everything, I have to be aware of that. Number two is understanding what it is. Okay, I can read through a paper. If it's in English, I can just read through the terms. But do I understand what it is? Right? So I have to understand what my core business activities are. Why do I have an LC with a particular entity? Right? Why am I dealing with a particular supplier? Right? So I have to understand the current position next. And when it comes to investments, right? What are equity? What are bonds? Mostly it's like we invest in equity, bonds, and real estate, right? Options, derivatives. These are the broad asset classes that we all invest in. So what are they? We have to understand them. Yeah. And monitoring. So we know what it is, where we stand, we have understood what it is. Now, how do I monitor, right? So that person must know how to monitor the existing investment portfolio, starting with, right? If there's a changing economic condition, right? There's a war going on, suddenly a war, it started out of nowhere. Nobody expected. Or some country is going to increase the interest rate, right? How are they interlinked? How are they going to affect my investments in business? The so-called safe assets like real estate and gold also are sensitive to these economic conditions, right? So I have to understand my investments. And then I have to, when it comes to business, I have to make sure that my offspring are with me all the time so they learn my business style. The Gen Z, they always want to change, and maybe the mature people, they think, I could have done things better. But first, understand what's worked, right? And then you can go on to change things. And when it comes to investments, how often do I review my investments? How am I, what are the questions I'm going to ask, right? What kind of review is being done? Everything must be shown, or it has to be transparent, because then they will learn your investment strategy, right? So, yeah. So after having done all this, right, is it enough if I just keep maintaining what has been handed over to me? Sometimes we feel it's better that way, right? So they don't go around messing up with new things. But still, there will be new business opportunities, new investment products that are always coming up. So how do I evaluate those? Right? So I have to show them what is my style of evaluating a new business opportunity, right? What are the parameters that I have? Does it fit into my mandate? So maybe I will not get into investments which deal with, say, alcohol or gaming or gambling, right? So, or maybe I'm very particular about Sharia compliant investments. So every person, every company has its own investment mandate. So I have to learn how to evaluate that. And I have to see whether I'm making an investment for capital appreciation, regular income, what is the objective, right? So say I'm a real estate person. So maybe some part of my real estate, right, is for income. I get very good rental out of it. For some, I just want to get into an off-plan property, snap out of it in 2 years, make a quick and profit and come out. So I have to show them how to evaluate investments, and I have to have a clear objective for each investment, right? That has to be passed on. And personal risk appetite. So maybe I can see my 1 million going on down to 700,000 and not lose sleep over it. But maybe my child cannot tolerate that, right? They'll panic. So risk appetite is not linked to age. It is a person's personal behavior, right? So maybe my risky way of investing will not suit my child. So I have to show them how to identify their own risk appetite and how to map it to the investment. So what kind of investments will suit this, and how to, evaluate the historical performance, expected returns, the risk reward analysis. All these have to be shown, because we're talking about people who will be handling quite huge sums of money. And we've seen that it's easy to blow up that money. So how to evaluate a good business opportunity? Maybe a friend comes and says that I'm going to start this business, become my partner. How do I evaluate that business opportunity? Yeah. And next is, of course, the practical aspect. These are all theory, right? So since they are mature adults, give them a portfolio to manage independently. Right? So when they manage it independently, right? Monitor, evaluate, give feedback, right? Provide an incentive. Again, maybe it's profit sharing, the profits they share or the losses, or, come out with an incentive structure for them to manage this portfolio. And show them who are the bankers and lawyers and consultants whom you consult. So if they have a doubt, they should be able to consult the same people and get the feedback, right? So when you give the portfolio to them to manage, right, a very easy way to help them learn is to make them double the portfolio 3 times in a row. Okay, maybe the first time I can put it in an asset which is very lowly priced, and in a year's time it's doubled. But doing it thrice, like say we start with $10,000, say, making it 20, 10 to 20, 20 to 40, 40 to 80. They're bound to make mistakes, right? They start learning about diversification, why it is important not to put all the money into one basket, right, of asset. So they will learn so many practical concepts in this, right? So give them this exercise, ask them to double it, and it will definitely help them. To summarize, right, for people who are ready to inherit the business, train them to manage the business. So identify the mentors again. And whatever we spoke about for the teens to young adults, that will apply here too, as to how exactly you're going to guide them in the business. Like you're going to help them get mentors, if possible, certification courses, right? Impart to them wealth management principles and methods, and how to identify a good banker, lawyer, advisor, right? What are the questions you have to ask a banker to know whether he's, capable of advising you, right? Give them a portfolio to manage independently and guide them. So we have here Mukesh and Anil Ambani, right? They started off on the same platform, but you see they're poles apart now. So again, to drive home the point that what you get is not as important as what you do with it. And Mukesh had a good set of advisors. He knew how to handle the money, and he's been able to grow his business. And Anil, he's not done so well. Everybody knows it. Yeah. So it's very important to learn the wealth management and the business development principles. Something for you, food for thought, maybe a little away from the actual topic. It is about succession planning. Okay, so you have your wealth, and how do you transfer the wealth? If you do it, if you plan the succession of business and wealth early, then it prevents a lot of heartache, because there is clarity in inheritance, and if there's any disagreement, you can resolve it when you're there. And a more important aspect is the tax and legal implications, right? The inheritance tax is applicable in many places, and the wealth tax. There are so many legal implications also. In the Middle East, if you pass away without a will, then the Sharia law comes into effect. So there are so many legal implications, tax implications. So it's best that you have the inheritance planned out and registered. Your will is registered. One important aspect that is overlooked is how to use insurance to equalize wealth distribution. So you have more than one child, and one is settled in, say, UAE, the other one is settled in UK, but you have property in India, and how do you equalize wealth distribution? Maybe the UAE property this child wants, and there's so much of complication. So an easy way, right, is to use insurance. It's the easiest way to create wealth, to create liquidity. So the person who doesn't want the real estate, maybe you create a insurance vehicle. So at the end of the day, right, when the insurance payout happens, there's a will which says that, the equivalent to the real estate value, the cash is given to the second child, right? That's a very simple example I'm using. So that way, they don't have to liquidate the real estate. They don't have to get into those last minute hassles. At the same time, everybody is happy. So, what is a very good topic on its own, using insurance to equalize wealth distribution? I'm just simplifying it in one sentence here. Yeah. And then in case there's a shared business, you have siblings or your children, like 3-4 of them together are going to share a business, have a family constitution, which dictates the profit sharing ratio, which dictates what happens when a new business is developed, and so many other aspects, right? So a family constitution will help clear all those hurdles. It'll keep things smooth within the family, and you can keep the family cohesive and happy. Yeah. Now, as a financial advisor, how can I help you, right, in making your offspring financially fit? So I can impart the importance of wealth management, business management. And where does it start? With the why. right? If they do not understand the why, they are not going to do it, right? Because right now everything is being taken care of. Every month or every year they have a huge income coming in, and they don't feel the need to understand, right? So I will make them understand why they need to learn it, right? That is the most important aspect. And also make them understand how easy it is to lose wealth, right? So that will motivate them to continue, right? So next is holistic wealth management knowledge, like, about what is it, the diversification of asset, and, all the power of compounding, what is inflation, depreciation, of currency, all these things, and then making them financially literate. So what is that? What is an asset? What is a liability? That's the technical aspect, right? So, imparting that knowledge to them. And next, of course, is how to evaluate financial products, right? So they have to know what to take into account before investing, right? It's a very complex world sometimes when it comes to investments. So I can help with that and show them how to monitor, how to evaluate, and I can curate the knowledge that has to be given to your offspring according to your needs. So that part of it, you can kind of pass on the baton to me to help your children gain the required knowledge. Yeah. And so I come to the end of my presentation. So thanks, Nishita.
Thank you, Padmapriya. It was a very nice session, of course. I mean, me myself being a Gen Z, I feel, really privileged to know such details. And I myself also have a family business. So I'm just thinking about this, that, I should take over, or what should I do about it? Or how can I help my family, ahead with the
Okay,
business? So that
that's
was really
nice.
nice. Any which ways, coming back to the webinar, if anyone over here has any doubts, please feel free to ask. You can put it on the chat box, or you can unmute yourself, however you feel comfortable. And also, this session will be recorded. So if you want to have a look at the recording once again, or if you want to get some knowledge once again for your revision, then of course you can go back to our recording and you can have a look. So any queries?
Hi, Padma. Thank you for that wonderful session. It's
Yeah,
always a
welcome.
pleasure to listen to you imparting something that we usually don't do, and that is number crunching and getting into the financial aspects. Tell me one thing. If a parent is not that financially literate, yeah, to impart training to their child or to their offspring who's going to take over, be it business or be it any employed person who is having huge assets, yeah. In that scenario, what is the right way to approach to make the child financially literate?
See, I mean, that's what actually we addressed in this. If my child wants to be a doctor, right? So it's not like I need to know medicine to help him become a good doctor. What we do is we put him through a college which is accredited, which is going to give him good training, and he does his house surgeoncy, and at the end of the day, he's going to be a doctor. So a parent not being good at numbers is not a handicap. It's not going to impede the child's financial education. You have to identify good courses, good mentors, and seek the help of those who can train your child.
So you say a mentor would be the best way forward, because I don't see many academic institutions who can impart financial literacy to people, children. Then other than getting into a financial course where they teach you
Yeah.
accounts and financial management and stuff. So a mentor would be the right way. That's what you
Yes.
suggest.
I'm also coming out with a course, Anupama, which is not the standard, like, teaching them how to do the balance sheet, trial balance, not the actual thing, but completely focused on how to handle, like, whatever I've spoken about here. I'm coming out with a course which will help the child, equip the child to manage the wealth. Yes.
Great. I'm waiting for that.
Welcome. You'll be the first to know.
Okay. Prince has some questions, Nishita. We just look into it.
Yeah, so Padmapriya, we have Prince asking us financial advice for Gen Z who want to start their own business than inheriting from parents.
Yes, I mean, this is, any generation that starts a business, right? So if you see, the mindset is what matters. If you operate from a mindset of, I have to achieve it, you will achieve it. So again, the numbers are at the crux of any business that you run. So get good at your numbers, get good at accounting, because I know of startup owners who are just 24, 25. I've met at least 4 of them. Yeah, who say every project they get 75 crores, 75 lakhs, 1 crore is their income. So these are big money, right? These are big numbers. So if they do not know how to handle it, then it's going to fizzle out, right? So financial advice is first know your numbers, right? It's great if you want to be on your own, you want to achieve on your own, it's great, right? Nothing wrong with inheriting and developing because your parents have worked hard for it also. So you're carrying on their legacy. There's nothing right or wrong about it. So inheriting and carrying on, you have big shoes to fill in. So that's a different challenge, right? So yeah, is there anything specific that you want to ask me, Prince? You can unmute if you want, Prince. It's fine. Okay.
Samita has
has
raised
put
her
up.
hand.
Yeah. Samita, if you have any questions, you can unmute as well.
Yeah, hi everyone. I hope you all can hear me.
Yes.
Yeah, it was very insightful. Thank you so much. And I wanted to ask is like nowadays the kids, the Gen Z, is overconfident and they think that, technically they are very sound, technology, they can access everything on Google. So and what they think is that when the parents or the older generation, when they advise them, they think that it's like old fashioned. So they don't want to follow that. And they say, aapke zamane mein aisa tha, but now it is not like this. You have Bitcoin, this, that. And they come up with so many fancy terms that even we are not aware, right? We try to understand, but still. So, how to channelize their mind and to tell them, to guide them. Because what I feel is what you have spoken today is more sensible and sustainable for long term.
Thank you.
Yeah. Then,
Yeah.
this Gen Z generation thoughts. Thank
Yeah.
you.
Yeah. So, sometimes your child comes back and my teacher's right? They need somebody else to tell them the same thing to be able to relate to it better, right?
Absolutely,
Yeah.
absolutely. They don't believe the parents that they have
Yeah.
handled very well.
Yes.
They don't
Uh,
trust their parents most often.
exactly. Exactly. For example, in my son's school, the head of the Department of Physics, his own daughter, he would teach grade 12 and he would set down the rules for physics, that course and everything. In grade 10, she'll come back and say, you don't know anything. My teacher said this. I'm going to do this in this assignment.
Right, right.
Yeah.
Yeah.
So sometimes you need a third person to come in and say the same things that you're trying to articulate. Right. So that's where I said curate the course with an
Mhm.
advisor to suit your needs. So coming from a third person, they'll take it better.
Yeah. Okay. Thank you so much. Thank you.
Welcome. Yeah.
Any more questions, anyone?
Yeah, one more question from me.
Sure, go ahead.
Uh, at our age, Padma, we have learned by trial and error.
Yeah.
Yeah. And that's more because of trying to do many things in different ways and then getting to success and then trying to replicate it. But I have a complaint against the financial sector. They make everything so difficult.
Yeah.
Yeah. So we took so many years to get used to it. How can we simplify this entire structure for our kids?
Yeah, see, there are some concepts which unfortunately are not taught anywhere, right? As simple as compounding or how inflation is eating away into your wealth, or, if you're going to earn in one currency, say we are earning in dirhams, okay? And if we are sending back money to India, it's like we are saving or investing in India in rupees. And then we spend for our children in dollars or in euros, right? So we need somebody to say, like, okay, this is the impact of currency depreciation, appreciation on your savings. So, how do you plan your finances? So, yes, there is a big gap, right now between what must be planned and what is should ideally be taken into account versus, what is being done by most of us. So, again, these principles have to be covered. Like I do give webinars, or, I've gone to a company, spoken about this and all that. So, knowledge sharing is the best way forward. And those who seek it get it, because there are many books, out there which speak about these, but not everybody reads again. So, only if you seek specifically for it are you getting that knowledge. So, there is a gap, Anupama.
Yeah. And I think we together should do something about it.
Yes, would love to work with you on it for sure.
Because simplification makes
Yes,
life easier, and of course, it's easier on the person also who is imparting that knowledge.
yeah,
Because
yeah,
from when you start talking about the ABC,
yeah,
that's when things start getting in a better position for people to be understood and for them to understand what actually is happening.
yes. You see, those who are wealthy, it was not magic. They just learned some principles, or were lucky enough to get to know of some principles firsthand, very young, and they just applied them, right? There was no magic involved. It was consistently following some principles, which is not easily available to the rest of us. So, would love to work with you on that also.
I should thank Nupana and everyone because lately there are influencers in the same way there are influencers. That's what they are called,
Yeah,
financial influencers.
yes,
So just now I came across that SEBI has taken a step against them
yes, yes,
because I think many of immature people, like the laymen, they were
yes,
just following what they were suggesting for
yes,
share market or anything or investments.
yes.
And then I was shocked to see that. But good, I didn't follow any of them because I want to play safe. But yeah,
Yes,
then see how people just take. So I
yeah,
agree with what you are saying that actually it should be like a proper, a step by step and a proper
yes,
guidance,
yeah,
not just going to anybody or listening to anyone, because this is all hard earned money of everybody. So, I mean, us. So naturally,
yeah.
it's better to channelize it in a proper way.
Correct. I mean, that's where the evaluation comes in. Like, am I just listening to a neighbor or friend and buying it? It's the same as listening to an influencer and buying, right?
Mhm.
So,
Right.
how do I evaluate whether it's good for me, whether it suits me?
Hmm.
So,
Right, right.
learning how to evaluate is also important. Like, advertisements scream out, billboards scream out all the time what you have to buy, but we use our discretion, right? The same way
Right,
with
right.
investments also. You can have, TV advertisements, or, you have influencers talking about them, but we should be having the knowledge to gauge how much we can take of it. Yes,
Thank you.
most welcome.
Any more questions? I think we are done then, Padmapriya. Thank you so much. Thank you for
Thank
an
you.
amazing session. Like I said, it was really insightful for all of us, and especially I liked it personally too. So, wait one
Uh,
second. Okay, we have something from Prince. Okay, he says, ma'am, my parents have truck transportation business and building material business. I don't have any interest in that. Rather, I tried building tech products from my freelance money. Like I build couple couple of
Thanks.
websites and communities for students, and it got a lot of users. But I'm poor with finance and communication. So how do I get finance knowledge and communication skills, because I'm not able to monetize my community?
Okay, communication, join Toastmasters, right? I've seen
Absolutely.
people grow in confidence. I've seen people learn how to communicate via Toastmasters, right? Identify a
Right.
good Toastmaster group, join them. So that'll take care of your communication skills and make use of ChatGPT for writing letters and everything. So, yeah. And finance knowledge, Prince, whether you like it or not, it doesn't matter, right? You have to learn. Yeah, you can say I'm poor with it, but if you want to run a successful business, you have to learn about accounts and finance.
Right.
And if you're going to say my livelihood, my income is going to depend, whether my next meal is going to be good or not, depends on whether I know accounts and finance, automatically your brain will say, go learn it. And don't take that as an option. Yeah, so there are courses out there which teach you the basics of accounts and finance. Learn it. And see, trucks transportation business, your parents already have a good business, which means that there are people who have good managers managing the business, right? So you have to learn how to manage that business. Maybe you're not interested in trucks, doesn't matter, right? As long as you have good people and you know how to handle them well, and you know how to get their loyalty because you're being nice to them, right? You can be an outsider and let the business function, but you must know whether how to read a balance sheet and just keep an eye on things. Again, it comes back to accounts and finance, right? So learn that first, the ABCDs of business. Yeah, I hope that's helpful.
Prince, I hope your doubt has been cleared. Okay, I'm assuming it
Yeah.
has.
Yes.
Great.
Yeah.
Great. So thank you so much. And like I mentioned that this this webinar has been recorded, and the link will be shared to everyone present here personally, as well as on our social media platforms. So, well, thank you so much once again, Padmapriya.
Thank
It
you.
was
Lovely.
lovely.
Yeah.